If you're in the entrepreneurship space, if you're a business owner, you're looking to start something, maybe a side hustle, and you know that financing is going to open a bunch of doors, then pay attention. It's time to talk about qualifying for credit lines and making that happen. So first off, what lines of credit are actually available in the year 2024? There really, at the end of the day, are three different revolving lines of credit available to entrepreneurs and business owners. If you are a brand new business owner, what is going to be available to you, or a smaller business owner with, maybe not a super profitable business, or you've been in business less than 2 years, what is available to you is going to be a 0% interest, for the first 12 to 15 months business credit card or personal credit card that is going to act as a line of credit. The differentiation between a traditional line of credit and a credit card is typically that cash accessibility, although we do have strategies that basically remove that issue and allow you to access cash. Keep that 0% interest rate. You never ever want to take a cash advance from a credit card, so keep that in mind. But a business and personal credit card is fantastic. It acts as a line of credit. It's revolving. You can use it, pay it down, use it, pay it down, and it's open as long as you maintain good payment history and the relationship is well taken care of. So that's line of credit type number one. Line of credit type number two is what we call an unsecured line of credit, more of a traditional line of credit. And this is based off of either really good personal credit and personal income in what's an unsecured personal line of credit. Those are very rare. Those are usually capped at $25,000 or less. And then you've got a business line of credit, no collateral. And typically this is going to come from your business bank account relationship because you hold a certain amount of money in the bank. You have, a bunch of money coming in and out through the business bank account, maybe your personal banking as well. If you do that, then you can qualify for an unsecured business line of credit, which is very, very advantageous. And at the end of the day, you want to have access to as many lines of credit as possible because you're not paying on them unless you use them. But you better have them, because we're going to talk in a second why it's so important to have those and what opportunities and doors it opens up and how it gets you out of sticky situations in just a minute. The third different type of line of credit is what we call a secured line of credit. And a secured line of credit, you think of a HELOC, a home equity line of credit, where the equity in your home or property is available through a secured line of credit, meaning it is secured against the property and it's secured against that property's equity, and that is a secured line of credit. So those are the different lines of credit. There's three of them. Let's talk about, how do you actually qualify for these lines of credit? Well, when it comes to the business and personal credit cards and being able to stack those up at a 0% interest rate and get all those cash back rewards, you need to have excellent credit. Typically, I used to say a 680, I would probably say closer to a 700 plus FICO score. These days, that's where it's at. You've got to have that 700 FICO score, number one. Number two, you want to have on-time payment history over the last 2 years. And number three, you need to have at least a $3,000 credit card limit typically, and you need to have that credit card paid down. And so let's say you have, a $10,000 credit card limit. That balance needs to be 45% or less, or $4,500 in this example, to qualify for that type of credit line. And if you can have installment history like an automobile loan, a mortgage, then that's only going to help you. And your inquiries need to be low. You shouldn't have a lot of inquiries over the last 6 to 12 months, probably no more than 2 or 3 inquiries, in order to, exponentially increase your ability to get that line of credit through a 0% business or personal card. When it comes to an unsecured business line of credit, again, you're going to need that 700 plus FICO, and typically you're going to need a business in which you are bringing in a lot more money to your business bank account than you are taking out. If you bring in $50,000 for the month and you take out 60, you're not going to qualify for a business line of credit. But if you bring in 50 and you take out 40, that's going to make that bank much more comfortable in issuing an unsecured line of credit. Again, unsecured, going against your business history. You're going to want to have, multiple months, probably 24 plus months of history at that bank. You're going to want to have some decent cash balances in the bank account. One of the key factors to look at is your average daily balance within your business bank account. So if you're holding only $1,000, it's not going to be very good. But if you hold $10,000, $15,000 in the business bank account, you're looking for a $25,000 to $30,000 business line of credit, your odds of getting that are much, much higher. Qualifying for a secured line of credit, there's going to be a lot more income verification. This is where tax returns are going to be looked at, especially if you're self-employed. If you're the business owner, entrepreneurial type, they're going to go through those business tax returns, make sure your debt to income ratio is below 45%, including all of your payments and the home equity line of credit or secured line of credit. When it comes to business secured lines of credit, sometimes that can go against potentially equipment or commercial real estate, but that's very few and far between. Most of the time it's going to be residential properties, and specifically a primary residence, where you're going to have the best chance of getting a secured line of credit and qualifying for it. So we talked about credit, we talked about income, debt to income ratios, etc., etc. Now let's talk about why you actually want to have access to as many lines of credit as possible. And the first reason is you and I can't always predict accurately what's going to happen, right? When there are emergencies, you can get through those tough times, and more importantly, when there are opportunities, now you can pull the trigger and make things happen without necessarily draining all of the cash in your bank account. And last but not least, a line of credit card, having that available credit and capital gives you runway. It gives you peace of mind at the end of the day. And as an entrepreneur, as a business owner, Steve Jobs, I think, said it best: sometimes it's just about survival. And if you survive over time, you're going to find more ways to win, and lines of credit are going to help you get there.